The obvious thing for the market to do when it sees a bank that potentially could be implicated in a story like this is to shoot first and ask questions later, i.e. mark the stock down aggressively. How does the market get its arms around understanding what the potential implications of this story is? Because information is, if I'm being polite here, lacking.
Absolutely. I think the first thing you've got to do is look at management reaction. So, for example, if you take a BNP, the reason that their fine was so big is that they didn't work with the authorities in the US. If you look at, say, Danske, chairman's gone, CEO's gone. How do you put a number on it? Well, I mean, the bodies in the US have different ways of approaching it, but you look at transaction volumes. If you can understand what volume of transactions flowed that are in question, well, they're allowed to put a multiple of maybe 2 to 4 times that. But say in the case of Danske, when you're talking 230 billion, that's a meaningless number. So you then look at, OK, what profits do we think they could have made from those transactions? And again, 2, 3, 4 times that as a fine. That's kind of, I think with Danske, we're a long way from understanding, but certainly it can't be 2 times 230 billion. But if you look at what's been taken out of the share price relative to the sector, well, we're talking mid to high single-digit billions of dollars. So you're quite right, shoot first, ask questions later. But at least in their case, they've taken a lot of steps to address this, but they still have very few answers.
Just in the case of Danske alone, we're talking about $230 billion of what's being considered dirty money, Jonathan. Where has that money gone, and what happens to the money that would have flown through Danske had this not been stopped?
Very good question. I mean, I suppose that the point is the allegations are that this is money that's flown from sanctioned people and or countries. So from our perspective, clearly we're not in a position to have any view on kind of where this is finished, but it's more a question of how does it impact the underlying business of Danske. So they're closing their businesses over there. We know they've got a pretty comfortable buffer for the fine. We know there's been management change. We know, as with BNP, there will be significant tens of millions invested in compliance going forward. But as to the kind of whereabouts of the money, I wouldn't like to speculate.
Very few people saw this coming, including the BIS.
Yeah, well, we chatted about this earlier. If you have a look, the BIS has a ranking of kind of the safest for AML, anti-money laundering practices in the world. And what's quite amusing is if you have a look at the ranking, all of the countries that are associated with this right now have for years and years and years in a row been considered some of the safest. So I think everybody has to go back to the drawing board.
One of the banks that has been drawn into this story today is RBS. Now, this dates back to the kind of the Fred the Shred era when RBS was expanding so rapidly, and ultimately the transaction that we're talking about here, which was one that came in from ABN AMRO, ABN AMRO, a very different institution now, kind of was the transaction that tipped RBS over. Would it have been possible for RBS to have done sort of D&D due diligence on something like this, to have got an understanding of the risk potentially it was buying? It just seems laughable that they would have done that.
In short, no. I mean, if you remember at the time, it was a race with Barclays, and you had this kind of, I think Fred the Shred, Fred Goodwin's comment used to be mercy killing. I mean, he was on global domination mode, and so buying ABN for them was more about volumes, balance sheet size. Certainly a trail of private banking in the tens to hundreds of millions would have meant nothing to due diligence at the time, and certainly wouldn't have been picked up. But I mean, bear in mind, this is before all of the mis-selling we've seen, all of the fines we've seen for libel, all of these other scandals. I mean, we were both around 10 years ago. We didn't used to talk about this stuff.
No.
Does this all mean that hedge fund manager Bill Browder has now been vindicated, Jonathan? And is this the end of the contagion?
I think it would be very premature to say it's the end. And has he been vindicated? No, because we haven't seen the numbers yet. Without a shadow of a doubt, there's no smoke without fire. That's quite clear. My colleague was on the call with Swedbank, a very long call, on the day that they were down 10, 15%. And the fact is, they can't deny this. They can't put numbers on it. They can't get their arms around it yet. So clearly there is something there. But from our perspective, what we've got to do is step back, think, OK, worst case scenario, fines, worst case scenario, bank licenses. So say Swedbank, they have got operating units in the US, so a dollar license for them. Is it at risk? Probably not, but that's the sort of thing that impacts a business, and that's what we've got to look at, coupled with a de-rating, particularly when you've got a management that isn't in a position to help you understand what the impact is.